What's up, traders? Welcome to Plays of the Day. I'm here with my good friend Randy Baines, and we're going to be going over current markets. We're going to be talking about where are we on the higher time frames, how could we profit from day trades today, and just overall what's going on in the market. So, how are you doing, Randy? And how was your trading day today?
I'm good, Thomas. I'm really good. I'm actually done trading for the day. I caught along this morning and was able to size up and manage it well. So I was able to get what I needed out of the trade and not have to trade anymore.
That's nice. I feel like this has been definitely a topic of discussion in my mind is like, at what point do I need to not trade the afternoon session? Like, can I just be trading the morning session and be done for the day with, like, air quotes, trading, maybe just 2 hours after the open? Because, it doesn't feel right. Like, to me, there's a part of me that thinks I should be staying at the desk longer and, continuing to find trades into the afternoon, maybe switching to different accounts that I'm trading with. So yeah, that's definitely a hot topic in my mind. What do you think about that?
Yeah, no, this is where I think for me, these last 2 days, just having that confidence to size up has led me to get what I needed to take out of the market versus, and I get it on those volatile days like we've been having for sure. You got to size down, but you get the moves. If not, if you're not, for me, if I'm not sized correctly, I'm finding that I'm not getting enough out of the trade and I'm having to take another one. And obviously the more trades you take, you're opening yourself up for some loss in there. And then you take that risk and you get that loss. And then before you know it, you're taking 4 or 5 trades and you're ending up with what you started with in the morning.
Mm-hmm. I mean, absolutely. And how do you determine for yourself, like, what's a comfortable size? Is it purely based off of, like, the account's drawdown, or is it more off of what like your body or your brain is telling you is comfortable?
Oh, there's a
Yeah, I know. I just saw that too. Something we'll be covering all this news stuff as well.
Yeah, I know. So on a lot of it has to do these last few days, like this recent decision I made had a lot to do with drawdown.
Okay.
So I've only really ever traded 50K accounts. When I first started trading, my goal was to have 20, 50K accounts, 50Ks where, you always start at the bottom, but then I got stuck in this rut of trading 50Ks, and then Top Step had a promotion where I got these $19 accounts last year and I bought 10 of them. So I've been always trading 50Ks and I've never had a lot of drawdown. So I've never been able to experience it. And I started trading a 100K account that I got funded with Tradeify that I actually took the payout on, but I still only had 30 because it was the growth account. I only had $3,500 of drawdown. So it still wasn't a ton, but it was more than my 2,000, 2,500 I've only ever been used to. Mm-hmm. And now I got a 50. So what happened during this volatile market, I had a 50K straight to funded top 1 futures account that I tried trading the way I wanted to trade and basically just went into drawdown and got smoked.
Yeah, I was going to say the volatility, it's like you couldn't even trade a 50K.
No. So I went and got 150K and I've never had $6,000 of drawdown before. So I've never had that confidence of putting $500 or $1,000 risk on a trade, where if I did that with my 50K, I would be, half of my drawdown would be eaten up in one trade.
Exactly.
So I think a lot of it has to do with that. And then I think once I got over that hurdle, because I told myself I was going to do this last week and I didn't. And maybe it was for the best. The markets were obviously more volatile last week. Mm-hmm. But this week I just came in and I told myself I was going to trade basically 20 micros or 2 minis, and I'm only at 1 mini in 10 micros the last 2 days, and that I got to, I have the big goal of 2 minis, but the 1 mini for now, or the 10 micros for now is working. Let's just build that confidence, lean into it, and as the week goes on and as as the account balance grows, I'll put on more size. But I'd like to eventually trade minimum 2 minis per trade. I think it leaves you.
And how much risk? How much dollar risk would that? Like just a flat $1,000 with a 10-point stop? Is that kind of the idea?
So that's kind of, when we get back to, and we will. You can see it's like we stayed within yesterday's opening range, and yesterday's opening range was 30 points. Today, we're 25 points. when you get back into a 20-point opening range, your stop shouldn't be bigger than 10 to 15 points, in my personal opinion. I don't think you
say it one more time.
I think when we get back to a 20, 25 point range, I don't think your stop needs to be bigger than 15 points max.
Yeah, I totally agree with that.
Right? If you're getting,
there's no reason to be buying at the top of the range with a stop all the way at the bottom.
At the bottom. Yeah. And especially now with you see the way price reacts at the New York, and I've been just playing around with the VWAPs a lot more since Austin's last podcast, and I've been just my low a day, my high a day, even the handoff I'm starting to play with. I don't know too much about it, but just watching how price reacts, you can set up multiple levels for your exit and not have to be 5 points below the opening range low if you're buying at the top, if that makes sense. You could set up some VWAPs and you could see where the buyers and sellers are coming in and reacting at whatever price that they paid at that VWAP. And you can see where, potentially where price is going to go, and you can make a decision. And if you got to get out earlier, you get out earlier and look for a re-entry. It's when you take those full 15-point losses, it mentally, for me, it skews my whole day. Anytime I take a full loss, it's my stop is, and it skews my days because my stop is obviously too big and I had too much risk on.
Okay.
So if like today, if I was in, or yesterday I was in a short and I had my stop just above the New York VWAP, and it was, I think, 11 or 12 points. I didn't need to put it above the opening range high in these volatile conditions. If the buyers want to step in and you get some weird tweet and we take the New York VWAP with any strength, why am I waiting to get up to the opening range high? If the buyers have strength in these market conditions, they're going to take every level in front of them if they want to. If Trump tweets something, they don't give a shit about the levels, right? You're getting like, look at today. It was another clear day.
It's like a complete opposite of yesterday and today. It's like today it's just we never touched the New York VWAP. We touched it at 6:39 West Coast time.
Gone from there, right?
And then gone from there. And then same on the other side. Same if we're looking at the short side yesterday, we touched the New York VWAP at 6:45 and then not again till the end of day. So exactly what you're saying. If it's going to run, it's going to run right now in these market conditions. And that's why it's important to be watching ES, watching whatever ticker you're trading every day and consistently throughout the day, so you could recognize these patterns and be able to take advantage of, there's like bi-weekly patterns, weekly patterns, and then there's monthly patterns, yearly patterns. And I feel like as day traders, we have to really be in tune with the weekly patterns and what's going on technically on that aspect, because if we look too far out, then we're not getting like what's currently going on.
No, I agree.
Okay, so let's get a little bit into the charts here. This news we just got is a couple White House things. So White House is close on Japan and India trade agreements. U.S. officials working on memorandums for future deals, may take a few months. So that might be a cause for a little bearish slide. And then China negotiations will be a slog, describes current bilateral trade situation as an embargo. So yeah, so we're just still in the trade war here. And so what I want to show on this stream from like a higher time frame charting perspective is like what happened, what the trades that I take on the 1 minute chart is now presenting on the 15-minute chart or the hourly chart. And it's interesting for me to be able to use technical analysis I use from a day trading perspective and apply that to the higher time frame charts. So like a setup that I consistently take is a break of the low of day VWAP. And if you look at, like, imagine this is a 1 minute chart or whatever it is, we have a low set here and then we have a high. So now we set the anchor to the low, which is on Sunday, April 6th on the gap down on the tariff news. And we can see that line is showing us who is in control from the bottom, essentially, which is what the current bottom is. And so we can see right here was the second time. Technically, this was the first time that sellers took control, and then this would be the second time because this was a failed control attempt. And if we look at this, we had a breakdown where we're seeing that sellers want to take control, and then this is just a classic like retracement. We're still holding the structure of lower highs on top. So even though we're bullish today, that is not that is no indication of further bullish momentum this week. And we did fill the gap from the Thursday night session, like this overnight session, and then we also touched the naked previous day POC at 418. So we basically reclaimed a couple levels today in this bullish retracement, because this really is just a pullback. We are in a downtrend. So there are people who want to call this like a bullish momentum, but really it's just a retracement. So that was that's just what I'm looking at from a pretty higher time frame perspective. And then today, I mean, when you look at the Mag 7 and when you look at the VIX, there's just no way you can short this kind of market. So even though I might be more bearish on a higher time frame perspective, intraday I'm finding longs because of the Mag 7 and the VIX. And so I know you had longs today as well, Randy. So if you want to, I'll just throw up your chart here real quick, and you could run us through what you were looking at.
Oh, I have it. I just actually closed it. Let's open it up again here. Yeah. So basically, looking into I have to have a bigger view on my 15-minute chart, but you had that. We had this in the overnight session, basically opened up above the start of day VWAP. So yesterday we had that slide. Price pushed down, and it made what looked like in the shorter time frame a lower low. But when you go back to that Wednesday the 9th, that tariff news on the pause, it actually still is a higher low. And into the overnight session, into the end of yesterday's New York session, we took the point of control, and price opened up above previous day's point of control in the overnight session last night. And we got above the value area high. And you can see here on my chart, I have this yellow line on the 15-minute. That is Friday's New York VWAP. And one thing I noticed was super clean was the rejection on ES and the exact same rejection on the same VWAP on NQ. So for me, I was, again, just like, how could you not be, like you said, how could you not be long biased? But I can't stress this enough, and I keep repeating this over and over again. And these market conditions do not marry the bias. It can change in the flip of a second. So everything is just screaming long. We're above the start of day VWAP. Price is trending higher. And I basically, at market open here, you can see price kind of chops around here for a few minutes at the New York VWAP, and we get above it. And originally I wanted to get in on this first break of the New York VWAP, but this, I call it a doji, call it a hammer, whatever, this candle prior where you had this indecision kind of made me want to wait a few minutes. And I just waited 2 more candles, and now we had a candle open above the New York VWAP. It's a strong bullish candle. I went long on it. There was no reason not to. My only concern was this Friday's New York VWAP. I would have looked to, on reaction. And as you'll see, I took half my size off basically as we took it, because I thought price could have rejected off it. I was content with just taking some size off, because one thing I did yesterday too was once I got to a point where I had, a few $100s of P&L, it was like, let's realize some of this. And worst case scenario, if this pulls back on me, I'll be up $200 on the trade. And that's what I used to get out of a 10 or 20 point move with trading 1 or 2 micros. So if I can get that on a move in 4 minutes, I got to start being okay with it instead of trying to hold on to the trade and getting the 500 or 600 I want out of the trade. I'm only saying that because it's, like I said, this level was a level of interest for me, and price could have rejected off of it. So I took half off there, but clearly the buyers were in control and they were just foot on the gas, and it just went. And 5260 was my original target. And once we got up,
why did you have anything at 5260? Because so Randy uses Bookmap. I don't use Bookmap. I just use the VWAPs in the opening range. But I could tell sometimes it helps with finding good targets. It
just gave me, and then there was targets at 50, 60, 70, 80. and it's basically round numbers. There's targets, but realistically, if I got in at 46. If I got to 60, that's basically a 15-point move. And in my head, that's when you have this size of a range, if we get a 15, 20-point move up, a leg up, that for me could either signal that's the new high a day and we're going to get a pullback from there, and who knows where it's going to go. Like, there's no need for me to look at 70, 80, 90, and 5,300 as targets, because I know just as easily we could just get to 60 and we can get a pullback, and then we might not see 70, 80, or 90 or 5,300 till the end of the week if we continue in this, if price keeps trending bullishly. But yeah, so we get to 60, and this is where, again, I would normally just leave all my size on and just get greedy and go and be like, oh, now I can get, on my 2 micros, I can get 300 instead of 250. And it's, if you think about it, what's $50? Like, I'm going to leave all that risk on for $50.
50 is sim $50. It's not.
Yes,
even
exactly. Not even real money. We talked about this yesterday, Tom. It's not even real money, like sim money. And so I took 4 more off, and I just left a runner on, and I basically was shooting for 5,300. And this is where I'm not going to call it impatience, but once we got to 5,290, I was basically $700. And right now I'm shooting for 500 to 800 as a profit target, just for the consistency I want to get to. With Top One futures, it's beautiful. They don't have you just have a 2% price target for a payout, and then you have your 20% consistency rule. So if you want to get to $5,000, you can do it in 5 days with $5,000 days. So it's very, so for me, I have an idea. I want to be $500 to $800 per day. And then that gives me a window of, 10 days to get to a certain X amount of dollars to qualify for a payout. And something I've also been doing lately is I'm just, not attaching myself to getting, the physical money of the payout. It's just, I call it a profit target. And once I get to the profit target, the achievement of that profit target is a payout. But for me, the goal is just to get to the profit target. And I have a profit target in my head. And so at $700 on this trade to close it there, even though we got another leg up and I would have hit the 5,300 and I would have been up another, I think it was like $60 or $70. It was, you got to be content with it. Just as easily, price could have pulled back, and look at where we are now. Like, imagine this news came in when I was at the top there and I was in full size, and it pulls all the way back down to New York, and you basically get stopped out at break even. Like, those are the things that put you on tilt, and they'll ruin you as a new trader. Like, literally, those kind of, they're not even mistakes, because a lot of veteran traders, I've been reading the book Prop Trader Secrets of the Prop Trader. Anyways, this book, that
the one by Etienne Crête.
Yeah, and it's super cool, because I'm on the last chapter, but I want to say it's 12 or 13 chapters, but each chapter is a different trader, their success story, their failures, and they're like literally like each chapter is 10 or 12 pages. So every night I'll read one person story. And there's
a prop firm.
Yeah, and they're all prop
cool.
traders. It's super cool.
Interesting. That's probably the first book that's on, or like the first kind of bigger news thing just on prop trading.
Prop firm, right? Yeah. So
interesting.
It was cool, and just reading that, there's a lot of these. Even there's some people that have been trading in that book for 20 years that will get stopped out at break even through 2 out of 3 times, and their third trade hits and they're okay with it, but they're going for a 4 to 5, 6, 7, 8 R. So they take those paper cuts. But for me, as a new trader, I don't want to do that, because it just makes me want to trade more. Like, I locked my account out today and I locked my account out yesterday.
Yeah, I love that feature with Top One. And so it's a great conversation we're having about how quickly markets can change, because we have been super bullish not touching New York VWAP all the way to this tariff VWAP. And this is why I think VWAP is such an important indicator. And it's a great indicator, because it is a moving support and resistance line, because this is a stagnant support level, this would be a resistance level. So we have a stagnant resistance level here, but price never made it to that level. So somebody who's only trading with levels might not see this as a valid pullback, because it didn't hit that level. But then when you use the VWAP, you can see it respected it perfectly once and then twice, and then now 3 times. So if this continues lower, it's going to be no surprise at all. And it's like this is where the technicals and the macro picture really are lining up together. It's like it's almost it's weird to me how like perfectly synchronous it all works together, because this news that got us to the Terra VWAP was when Bessett was talking about the trade deals with
China.
when Bessett was talking about the trade deals with China.
Yeah.
And then later we get news about like more trade deals. So this is the volatile period coming in. I think this is going to be a point where I want to personally chill out, because if we see on the left side, we just rejected this Terra VWAP. On the 1 minute, we are consolidating around the New York VWAP. There's no clear direction. And then we're fighting the electronic hours daily VWAP here. So there's a lot of indecision right here, and definitely a lot of volatility. So if you are in any trades, I would definitely just play defensive for sure. But with that being said, how are you managing your prop accounts right now? And like, how many do you have, and what is your profit target for your next payout? Because I know you just took your first payout, so maybe you could also speak on, just what got you there.
So what got me to the first payout was the fact of, like I just said, not having, not mentally spending the money before I got it. Not mentally needing the money. And not even that I'm like, it wasn't even the sense of needing the money. It was like, I thought about it after, and it's like, I've been trading for 14 months. My bills have been, the rent's paid, the bills are paid, we have food on the table. And here I am putting all this weight on chasing a $3,000 payout. So if I got that and even like I was telling Hillary this morning, and you're probably going to say the same thing she said, but my payout is still sitting in my Rise account. I haven't even transferred it to my bank.
It's not that it's that important to actually withdraw, like to put the funds in the account. It's more about like the milestone.
Exactly. And sorry, just one sec.
Yeah, no worries.
And and so now moving forward, I'm just focusing now on so now my next, so a couple of things. Sorry, I'm just kind of scrambling all over the place. But last week I was trading 2 accounts. I was trading Tradeify and I was trading Top One Futures. The Tradeify account I took a payout on. I had $3,200 or $3,300. I took a payout. The max payout was $2,000, so it left me basically $1,100 of drawdown. So what I was doing is, the goal was to get that back up to 3,100, and then I could take another payout for 3,000. 1 second, Thomas. Sorry, I got to take this. My wife just keeps calling. It could be an emergency.
No
1 sec. I'm sorry, guys.
All right. So let's look at. So basically, I would not be surprised if this continues to come lower. However, this is like a very classic VWAP pinch for me. I find it's the most difficult to be in trades when you can see both sides of the market and you're unsure about which side to put more weight on. So, for example, the way I would read this here is I could take a long from the daily VWAP here. I could take a long, and I know I'm trading into the resistance from the higher time frame trends. Now, like we could see here, it's just continued lower highs on top. And like Brian Shannon always says, a trend once established is more likely to continue. So this could always be the higher low. This could always be the higher low before we continue higher. But we are also, let's actually look at this 5-day moving average and see where we are in relation with this now, because this is another great just a great indicator of who is in control. And so, yep, we can see the 5-day moving average. We are holding under it. And then as we hold above it, we can see this is just a short-term bullish pop. And then again, we tried to get above the 5-day moving average here, but then we found the resistance at that Terra VWAP and continuing lower. So back to my original thesis here is, why would I want to take it long just because it touched New York VWAP and it's been a bullish day, but then you're not taking into consideration all of the other important factors that are above you that may be more important to be considering. So for me, this is a place where I'm going to sit on my hands and I'm going to wait and see what happens. If in 30 minutes, if it does something like this, where we break into the range, come back up and test the VWAP and then continue lower, now I can put a swing low VWAP on this level and then capture this next move down. So there's always opportunities. You just have to be game planning and basically just finding, I see both sides to the trade, but which side is more likely to work.
Yeah, no, I wanted to see that 5-day moving average.
Yeah, I'll throw that back on. This is I sub to Brian Shannon, so I get access to some of his indicators in like weekly and daily analysis. This is his like line in the sand, basically. If we're below the 5-day moving average, stocks are in a downtrend. If we're above the 5-day moving average, we're in an uptrend.
Yeah, I know. After listening to his the last podcast he did with Austin, I really look at this. These candles are just like, people are just getting, I bet you, just chopped right out. Like that candle like 6 minutes ago was, that wick is a 20 point wick and candle.
Yeah.
But like I was saying, just focusing, the way I'm looking at the VWAP more and more, and the way Brian Shannon kind of explains it, like I said, when I have a high a day or low a day, and I use that as an entry, and then I use that also as like, it's going to be an exit strategy, or where I'm going to take profits. Because the more I'm looking at it, the more I can see where the buyers are starting to lose money or where the sellers are starting to lose money, or vice versa. Mm-hmm. You can really start to appreciate that moving VWAP and see, okay, these buyers got in here. We get below this, they're losing money. So what do institutions do? Either they're going to sell it if they're losing money, or they're going to put the foot on the gas and they're going to buy more and they're going to push price back up. And
Go ahead.
No. I just look at it a little bit like I put more weight on it than I have in the past, but I just watch how price reacts to it. And I just really think about, if I was a buyer or seller, what would I be doing at this level? If I bought at the low a day and we're waiting for a low a day VWAP break for this to come lower, but I bought at the low a day, not selling. When we come back to that low a day VWAP, if I bought at that low a day and we get below it, I'm technically going to be on average losing money.
Mm-hmm. Yeah. So
now I want to either add to that position, or if it gets below it, I'm just going to sell it. And that's what institutions, they don't care about us retail traders. It's like how Scott Pulcini talks about the algorithms. These were developed and implemented by the institutions to get rid of people like us, because now we're taking too much money out of their pockets. And it's true.
So then as a day trader, what are the main VWAPs you're using? Because like we could put them on the 15-minute chart and everything, but we're not necessarily taking day trades off that information.
No. So I'm strictly VWAPs on the 1-minute chart. I'm back to, now that we're having 50 to 100 point moves in the overnight session, I keep my start a day VWAP on. We're getting enough volume in that session where I believe that it holds weight. You're getting enough buyers and sellers in at that VWAP. And you can go back the last 2 weeks and have it on and I know there's a few people in our group that don't use it, but I have it on, and you go back and look and you'll see price respect it or reject it. Because you're getting 100-point moves in the overnight. We didn't even get those in the New York session a few months ago, let alone in the overnight. So I have a start a day VWAP on, I have a New York VWAP, and then I'll have a low a day and a high a day. Sometimes if you get a big enough move, like a pullback and then a big enough move up or down, I'll have a swing high or low VWAP. But if it's a small pullback, I'm not going to bother, because everybody was in at that low a day, or everybody was in at that original high of day, because that's where people bought. Obviously, the price took us to that point for a reason. People bought or sold to that level. And
I mean, just to go back to this moving support and resistance, like anyone who's not using VWAP, I would highly recommend you check out just this indicator as a whole, because we'll look at the two VWAPs here, from the low and then from the tariff news, respected beautifully, And then here's exactly what I mean by support turning into resistance. It does happen to be the same price level, and it's also at a key VWAP. So this is just support becoming resistance, and then now that resistance becoming support again. So it's like these levels could not be more clear. And obviously all this is in hindsight, but when we're coming into the session, I'm looking at this and saying this could go from the low of day to the Terra VWAP. That was a game plan I wrote in my TradeZilla DRC this morning. So I think it's a great indicator for me to use to help game plan, to find levels. If you're struggling to find like price levels as a day trader, I would highly recommend using VWAP. And then just to go over from the Terra VWAP, it was just kind of shaking out. I see this whole area here is just a shakeout. And then as it starts to retest it, it fails and then continues lower. And then here it fails again. So just a real masterclass on VWAP with what's going on right now in the markets.
Once you start to use VWAP and you really start to understand it, because in the beginning I was just throwing VWAPs on everything. And you can put this obviously, you can put a VWAP, you can put a line, you can put any indicator you want on a chart, and it's going to touch, it's going to bounce, it's going to reject, it's going to do, like, price will do something at that point. And you don't even know why or what it did it. But once you understand the VWAP and how it does work and how it is that volume weighted average price, I believe is VWAP what it stands for, but how it's time based, price based. It's not just one thing. It definitely is and now I'm starting to see, and I'm not diving too deep yet, and I don't want to get into it on this conversation, but the handoff. There's validity to it, but again, that's like how I say price acts at a low a day or high a day VWAP. It's the same idea. At that handoff, certain people in the market got in and want to make sure they keep price above that or below it, and that's like Brian Channing says. That's when you get into the knife fight, when you're actually at the VWAP, and you don't want to be buying at the VWAP. You want to be waiting for the strength. And now it's like, before I would buy at any break of a high day VWAP, and when in the last 6 months, that's all I would do, and I would get smoked 60% of the time probably.
I mean, hell, I think that's a great place to leave it here, because we can leave it with these levels. Right now, we are in for me, a no trade zone. We are fighting. This is a knife fight at the VWAPs right now. 5,300 and above, I'm looking for buys. 5,250 and below, I'm looking for shorts. Those are my levels going into this afternoon session. Any final levels or any thoughts, Randy, before we close it up here?
No, I agree. I think that New York VWAP, if the buyers can't step in, and you can clearly go back to that candle where that whatever news or whatever buyer stepped in there, and you have that 20-point wick. It's clearly telling you that the buyers are not, they're trying to be strong, but the sellers are just have the upper hand at the moment. And you could see price pulling up to that New York VWAP, and basically sellers stepping back in and putting their foot in the gas, and people just getting stopped out, and all the buyers getting stopped out, and the sellers just hammer it down. Yesterday, it's like the buyers took the day off on Easter, right? And only the sellers were around yesterday, right? So, especially on big moves, I notice up like this, the buyers do get exhausted, and same vice versa on the selling side. So, the buyers could be seeing some exhaustion at this point, and the sellers have just been sitting in the background waiting to put their foot on the gas. So, I'm not trading.
I think we'll look at it as a squeeze. Today was just a short squeeze. Anyone who was running overnight shorts or anything like that, trying to take a pre-market short with a stop at the high of day from yesterday, those are people that just got squeezed out today.
Yeah, no, 100%.
The biggest bullish days come from the deepest bear markets. So that is something to always remember in these market conditions.
Yeah, and the beauty about it, the one last thing I'll leave is that, to all the new traders out there, like, look at this as not getting your ass handed to you. Look at this as learning to trade through. This is 14 months I've been trading, and I thought the the yen carry trade was a disaster in the markets, and that has not, what I mean? This just trumps it, literally.
Every couple months there'll be something.
Right, but it's gonna prepare you for the future, and you're gonna go into the, when the markets calm down, you're gonna have a level head, and you're gonna know how to handle the markets a lot better, right? So it's 100%. Better to be learning in these conditions than learning in the mild conditions and coming into this thinking you know how to trade and then get your ass handed to you. So I'm one of those people.
Man, that's for sure. People have been saying that it's like people that I've been listening to that have a lot more experience than me have been saying these are difficult market conditions to learn in. So yeah, if you're new, like both of us, it's our job as a new trader to not get frustrated with ourselves or the market, and just to continue to view everything as a learning opportunity.
100%. I agree. Every trade is a learning opportunity, win or loss, right? So
100%. All right, with that, we'll end it here. Cheers, everyone.
awesome. Thanks, Thomas.